fairly disappointing. What are your biggest takeaways here?
I think the bookings and ride growth look good. It was just a revenue miss, and part of that was related to the use of subsidies in their ride-sharing business as well as food delivery. That's where I think they've been using subsidies for a while. That's where they've been seeing pricing pressure because food delivery is a very fragmented market. But on the core ride-sharing side, I think they are doing fine. It's just the law of large numbers is catching up, and bookings growth of 37% constant currency, to me, it looked fine.
I should add that the adjusted loss was lower than anticipated, $656 million versus the $979 million that analysts had estimated. But monthly users are below estimates, 99 million. The street was looking for more like 101 million. What do you make of that?
Well, the fact is, Uber is a global company. They may choose to, focus on certain regions more than the others. And this, to me, was a small miss. Again, I'm not making much of the rider miss. It's really the use of subsidies that caused the, the big revenue miss. And that's a sign that Uber is more focused on market share gain. We saw from Lyft, they are trying to curtail their sales and marketing expenses. I think Lyft is not going to expand geographically. So Uber is really trying to take market share right now globally, both in ride sharing and food delivery. And that's why you see that.
Well, and Lyft did have what became a positive day yesterday. I mean, they beat across the board. They moved up the lockup period. Investors didn't like that, but shares were up today. Uber's now lost the gains that they made today going into this. Do you see a path to profitability?
I think, again, if you look at their core business, they give better disclosures than Lyft in terms of bookings and core business contribution margin. The core business contribution margin was 8%. So there was a sequential improvement. And what it tells me is, again, if they wanted to make these businesses profitable, especially the mature businesses like the ride-sharing business, they can do it. But right now, they're focused more on market share and really that platform effect in terms of adding new services and, using subsidies to gain market share in food delivery. That's the big one. And I think that's going to help them in the long run.